Okay, we are back. So we're very excited going to be able to get into the first why you're here. When we were exploring the various different things that we could do, because you sort of like you get from home and you don't know how to make more money. It's like, okay, there's got to be a way, and you become almost like an FBI investigator. You know, your mama bear kicks in, and I've got to figure this out. So I needed to figure out all of the different ways that we could earn money and learn the techniques to see if I could apply them. First, I'd like to talk about value investing, and that's essentially stocks. So value investing is a little bit different than contributing to a plan that's managed by a broker. Value investing is a strategy involving stocks that involves picking stocks that appear to be trading less than their what they call intrinsic value or book value. You can do an evaluation of a stock. So, you know that the car is actually worth this much, but somebody's selling it for this. That's a situation you can get into. You can evaluate stocks and determine that their valuation of their intrinsic or book value is less than what they're selling for currently. So you can watch for sales. Essentially, when something goes on sale at the grocery market, you go buy a caseload of them, right? So that's sort of the general layperson interpretation of value investing in stocks. So basically look up stocks that you think that generally the stock market is underestimating the value of, and there's a specific financial analysis. It may not necessarily reflect what big multi-billion brokerage firms are doing, because they have different objectives. They're taking your money and they're trying to diversify it and basically spread out your risk over a whole bunch of options and put them together and make a lot of money for themselves while they're doing it. Value investing is picking something specific and knowing why specifically it's better or worse, and then trusting yourself and not following the herd. So they're value investors and analyze and read their stocks. They don't necessarily follow the popular opinion, and they're long-term investors of quality companies, not just whatever the fad is. And so the most famous value investor is the richest man in the world, Warren Buffett. Value investing is a legitimate, and lots of people take a value investing approach. People are taking charge more of their own investments. So value investing is the way to do that. So what is actually involved though? So I took an extensive course that was sort of delved deep into this stuff. So what is it that if I were doing value investing, what are the kinds of things that I'd be working on? Okay, well, at first you'd be reading a lot of 10K reports or company annual reports. 10K is a US specific term, company annual reports to analyze the company based on a set number of factors until you find one that you like, that you're confident in, and that has good numbers. So you go about this analysis in a specific way, like there's a method, and you determine, how protected their brand, solid their brand is, how margin of safety, evaluation of like how long it would take to get your money back if you invested, what brokerage or how you're going to go about making your trades, knowing when and how to make your trades, and understanding risk management so that you don't, screw up. So, there's a specific method to it, but you don't really need to be an expert. Like, you don't have to have a degree in finances, and you don't have to, you just have to enjoy reading and thinking and, being confident about your decisions, and really invest in things that you personally enjoy, that you personally value, that you personally partake in as a consumer. Because if you're doing it, it's likely that other people are doing it too. So and these companies are serving us. So it basically, you will need time to follow the market, pay attention to what's happening, sort of like Like you pay attention to what's happening in your own family, you pay attention to what's happening in the company. So you're kind of like reading reports and doing analysis and you know, thinking about following the news and the general trends. You don't have to be like have an intravenous drip of financial news or anything like that. It's just, you know, follow along. The benefits of value investing is that you can get far higher yields than sort of your typical broker run plans. I can't even, there's like, you know, single digit yields of very low numbers. Or, you know, even if you think of your bank long-term deposits and those sorts of things, it like pennies on the dollar sort of returns, like not even. If you pick a stock that is on sale but has good value, when it comes back up, that can produce you significant percentage results. So, you know, 9 to 20 we've seen in some of the value investors. There's various different value investors you can follow, that you can watch what they're buying and what they're not buying. There's a whole you know, world to it. But the other reason it's good is because so you're getting higher percentage back, which means you'll make more quickly, but also you're paying less in fees. So your current plan that you pay into, or they're, you know, buying the stocks for you, they're taking quite a chunk of the fees, you know, and there's a lot less flexibility. You don't have direct say over which stocks are in your portfolio. Whereas, you know, here you pick the portfolio, you don't have to pay the fees because you're buying them directly. And you can reach your goal faster. Or if you start late, if you're really focused, you can sort of come from behind if you started late. So then once you've kind of like picked your stocks, and we're not talking like hundreds and hundreds of stocks here, like you can pick, you know, your 5. It depends on what you have to put in, and if you don't, that's one of the barriers. We talk about sort of the cons and the downsides and the things to watch out for in our longer program. This is just a quick overview of some of the good parts. Once you've invested in or are into the stocks and you're in a routine, you know, your maintenance is just, you know, done in a couple of hours a week. But when you're in the startup period, it's going to take like more like 10 hours a week of like reading, understanding, doing number crunching, just to determine whether a stock is something that is on sale. So I think Warren Buffett's fond of saying you want to buy a $10 bill for $5, right? You want to be able to know when something is worth more than you're paying for. So you spend a lot of time at the front end doing that. The other thing is that obviously they're an asset that you can pass on to your kids. So that's value investing as a quick once over. You can check out people like Phil Town or Warren Buffett. Phil Town's got a live Facebook. Lots of these guys are on socials now. Good news sources and free places where you can kind of check out what other value investors are doing.